Good morning, everyone, and thank you for joining this panel. Thank you to Electronic Autonomy for putting on this amazing conference. And so far, I have met so many people from beyond just my little part of the world, which is mining, and all the downstream parts of the process to get electric vehicles into the market to help us in our journey to a low-carbon future. So I'm Samantha Espley. I like to think of myself as a mining influencer, so I work a lot with the mining companies around the world to try and bring low-carbon solutions in terms of their metal production, mineral production, and processing to reach their next stage in the journey on the supply chain. I am really honored to be talking today about the supply chain, in fact, from mining through to, just say OEMs, through to you. As the customers of these products, and with our Indigenous partners and focus on how to make the supply chain even more stronger than it has been in the past, and with trends and oversight of what's happening in this space with Alla here. And so I'm just going to allow each of my panelists this morning to give their two-minute pitch on why you're here and why it's important for you to be listening to these people this morning.
Yeah, thanks. So Simon with GM again, absolutely a pleasure to be here, and thanks again to the Electronic Autonomy for inviting me this year on top of last year, so it seems like it was not that bad last year, so thanks for that, Nino and the team. Really, why we're here, I think the answer for me is obvious. Canada is absolutely central to our strategy. We want to build, I think we've been very clear about this at GM, we want to have an all-electric future. We want GM to be a central part to that all-electric future, not just in Canada, in all of North America, and if possible, globally. But in order to achieve those objectives, we absolutely need Canada. And I think the best example to that is what we are doing right now in Quebec with this cathode active material facility that we're developing. And I mean, we could be just doing like others, which is essentially, oh, let's have that facility and job's done. But actually, GM is really focused on building a vertically integrated supply chain. So we want to do it all as much as possible in a cost competitive, in a secure, in a stable, and in a sustainable manner in Canada and in North America. So the best example, in my opinion, is how we've been able to connect directly minerals being mined in Sudbury, and I've seen some of the people from Sudbury here in the room, and yourself actually, and mining minerals from there, getting the nickel out of the valley operations in Sudbury, taking that mineral concentrate, smelting, refining, producing class 1 nickel, then moving this to Quebec, converting it to nickel sulfate, then making precursor materials and cathode active materials all in Quebec. There's so many steps in the value chain that we can do in Canada, and this is the perfect example. It'll be the first ever example, in my opinion, and to my knowledge, in North America of doing so. And I guess I'm reaching the 2 minutes.
That's 2 minutes, but that's
yeah.
very great way to kick us off. Thanks, Simon. Johnna.
Yeah, good morning. Thank you for inviting me to the panel today. Thank you for listening. My name is Johnna Muinonen. I'm the president of Dumont Nickel. Dumont Nickel is one of the largest undeveloped sulfide nickel and cobalt mines in the world. It is located in the Abitibi region of Quebec, which is a very active mining region outside of Val-d'Or and Rouen. The mine itself, it will produce an average of 39,000 tons of nickel per year once in operation. To put that in perspective for this crowd, that's enough nickel for about 780,000 EVs annually. So if we look at sort of how much that could develop. The mine itself is permitted both federally and provincially. And we have an impact and benefits agreement with our local First Nation, which makes them partners in the project. Right now, we're advancing work on several different fronts, some technical, some engineering, and then looking at putting sort of the financing package together to be able to make a construction decision in 2025 that will then produce nickel and cobalt for the car markets in 2028. And so that's our timeline, and that's what we're looking to execute.
Yeah. Well, very exciting, Johnna.
Yeah,
thanks for sharing. Saga.
Good morning, everyone. My name is Saga Williams. I hope that you can hear me. I can't really hear myself. I am from Curve Lake. I'm Michisagig Anishinaabe Kwe. This is the traditional territory of my ancestors, so welcome and acknowledge the work that they've done to maintain and sustain this environment. I work for the First Nations Major Project Coalition. I'm an advisor on member relations and external relations. I support the critical mineral file. And part of the work that we do with the coalition is build capacity for First Nations participation in major project development within this country. We talk about how communities can share their capacity and involvement in major infrastructure, in mining activities, any resource development, really, when we're talking about transmission and the energy sector. So I'm really happy to be here. I'm happy to share my knowledge in terms of First Nations participation in this environment. And from the conversations that we've had in the green room, it's really not necessarily about bringing people along in this conversation. It's talking about concrete steps to involve First Nations in these partnerships and starting to implement agreements and starting to build the capacity of First Nations to take up this sector in terms of their involvement. So I think one of the things that we're really looking for is some specific examples and some specific role modeling around what that could look like, and sharing those opportunities to build the resources that First Nations need to participate in this area. Glad.
Thanks, Saga. Interested to hear more as the panel goes on. And Alla, your story.
Good morning, and thanks for having me here. I can hear myself really well. My name is Alla Kolesnikova, and I represent Adamas Intelligence. It's independent Canadian market research and advisory company. Ever since I joined Adamas in 2018, I've been following EV industry globally and supporting my colleagues, again, supporting various developing and mining projects across the globe. But nothing excites us more to be able to contribute here at home to Canadian value chains. And I personally have a dream, hopefully sooner than later, own a North American-produced battery electric vehicle whose battery and motors are produced for responsibly sourced Canadian metals and materials.
Wow, me too. Eric.
Thanks for having me. So I'm Eric Desaulniers, president, founder of Nouveau Monde Graphite. We founded a company 12 years ago. We have now just north of 100 employees, all based in Quebec. We've invested north of 200 million in what we're doing today. So we are developing the two largest and most advanced mining assets in North America. So the phase 2 that we're building is the Matawini mine at 100,000 tons per annum. Construction started. Pending completion of project financing, we'll complete the construction of the project. And also, we just acquired last week the phase 3 of our journey, the Wetnan mining asset that we're developing at 500,000 tons per annum. It's already an asset that was fairly advanced by Mason Graphite, so we're welcoming any inquiries from customers. Is 500,000 the right number for North America? But currently, it's the largest project in development in the world, even including China, Mars, or whatever known to human. It's a very large project, very great deposit that will require like the future of the graphite industry, bigger mine built in bulk. So this is what we're doing at the Nouveau Monde Graphite.
Yeah, perfect. Nice. We often spend a lot of time talking about the cathode, but not so much about the anodes. And so, you know, it's nice to have representation here from both sides of the battery.
Someone need to do it, yeah. Someone need to do the anode.
Yeah.
That's right.
Let's kick off our discussion with a few questions that I have for the panel. And then, you know, at the end of the session, we're going to take questions for all of you for anything that's burning in the back of your mind. So be ready for that. So, of all the different parts of this, you know, Canadian EV battery ecosystem in mining, refining, and delivery, commercial scale products, really knitting this supply chain together into the auto sector. And we're calling this the new frontier. This is not the first, it's not the last, but it is the newest. And so, you know, I'm curious, what is Canada's full potential in this space? And I think I'm going to just start here with the miners. So maybe start with Johnna. Just let us know, like, what are one or two roadblocks really for you that we really need to think about?
Yeah, so I mean, I think, you know, and it's not maybe as much a roadblock as a challenge, but like you said, it's new. So it's not just new mines, it's not just new, it's new processing, it's new So it's, it's about 5 to 7 steps between the mine and the car. And it's all of that being new. And it's developing new pathways for the product from the mine to get into the products to the car. So it's not just, historically mines have been developed, they sell their product to smelters, that makes a refined nickel that gets sold to the LME or the London Metals Exchange, and it's a commodity. And it's very different when we start to have those conversations about involving in a supply chain. And the conversations become very different than we've historically had to look at, and that's it's been a challenge. It's been something that we've been working on probably for about 2 years now. Is working through those conversations of we're not just making a product that's going to a smelter that then is tied to London Metals Exchange prices on a commodity basis. We want to make a product that ties us into a supply chain that makes a car. And that gives us some really interesting opportunities to start looking at how do we think about pricing the product, how do we think about integrating ourselves into that supply chain that potentially needs less volatility than what we've historically looked at on the mining side. And so I think that's a really interesting piece, but we've been working through that to understand how we can work on that. And then the other piece, of course, is funding. These are large capital projects. Dumont itself, when we look at the Dumont, the mine and the mill, which is 1.2 US billion, and then we look at what we're looking at on a sister company called Nivolt, looking at the conversion facility to take our product and turn it into a product that could be fed into the battery side of things. We're looking at another, 300 to 400 million. And so these are large capital projects. So being able to attract capital on the mining side, and we're privately held. But if you look at the public markets over the last little bit, they haven't been super supportive of junior mining companies. And so how do we get the money that's required to build these projects? And I think we've seen a lot of money, especially if you look at the government money, we've seen a lot of money flowing to the downstream, where we see the car plants, we see the gigafactories, we see the battery plants, the cathode plants, but we haven't seen as much money into the upstream. We've seen some R&D dollars, which is great, but there hasn't been sort of those really big chunks of money coming upstream. And I think when we look at the opportunity Canada has, we have an opportunity in the upstream. We have an opportunity on the mining side. We have an opportunity on the refining side, because that, we are a resource-based economy. We are a resource-based country, and that is our greatest asset. So, I think that's another piece that's been interesting.
Yeah, no, I can't agree more, Johnna. We know the mining has been a little bit overlooked, but it's absolutely the start. Somebody told me that was like the bottom feeders, but anyway, I found that a little bit disparaging.
Yeah.
Let's go to Eric on the mining side. What can you add to Johnna's observations?
Yeah, I think Canada in general is great. Like, we have 4 great attributes that are pretty unique to build great projects on paper. So first of all, we have great geology, and we have a big landscape, and we know how to find deposit. We're good at this. So this is important and fundamental. You need the geology to build a full vertical. And second, we have the infrastructure to transform the minerals. We have it. Like, we have very cheap and green hydroelectricity that is affordable, but we also have all the different reagents, like chlorine in our case. We have a lot of different things that is already there, and it's very unique. That's something that you don't quite have in a lot of jurisdiction. We have a willing government, and we have a willing workforce who knows about that transformation, who knows about the different technologies. We have patents. We have a lot of research institution to know how to do it on paper. And we have very friendly customer all around us in the US and now more and more in Canada who need the product. So we have very important 4 ingredients to make great project on paper. But what we need to work on, 2 things. First of all is a healthy capital market for critical metals. We need to revive Bay Street, and we need the government to give them some weapon to be rocking our capital market. Like, for instance, the flow-through shares are very successful at developing exploration projects. But I would like to extend the flow-through shares to the construction of CapEx of critical metals. That's an easy fix. Let the market, bring the capital afterward. That's one thing. And also experience. Like, second thing we don't have yet is experience. So how to make the very difficult thing that Johnna was talking about of having a successful supply, making a profit, and quality product. So we know how to get there, but we never did it. So we will need strong partnership between customers and companies to make it happen successfully.
Mm-hmm. Yeah, great points. Thank you, Eric. Let's swing over here and Simon maybe add in from the automaker point of view.
Yeah, no, I think those are very good points. Right now, the main challenge we have, of course, is the market. The market is very painful, especially if you're building a lithium project or even nickel these days. I mean, honestly, sorry, but that's kind of a bit crazy because in the long term, our commitment as the clients remains the same. Of course, instead of climbing the hill this way, we may be climbing the hill this way, but we're still getting to the top of the hill. So I don't understand really the reaction that the market is having right now and those price just falling apart. I really don't get it. But so you're totally right. There could be a way of actually, and maybe yes, it's kind of a backlash from very high price, crazy prices. So maybe it's a balance that we need to have in the market. And totally right. Maybe the government could find ways to support that and help it. But in my views, the real enabler that we're trying to fix right now is, as I was saying earlier, to get that vertical integration in the supply chain, we need those very critical conversion capacity to move from mining to chemicals. Because the EV industry is a chemical business. Essentially, all of those battery materials or raw minerals, I'm sorry to say, I've said it in Sudbury and everybody was looking at me, but nickel in itself is useless. Graphite in itself is useless. It is only because the Nouveau Monde, for example, they're taking that graphite concentrate and making a coated spherical purified graphite that's useful. The same with nickel and the same with lithium. So those connecting enablers is, in my opinion, what's really missing. You can open, like Benchmark Minerals was saying, we need 384 new mines. I'm sorry, if you have 384 new mines, which is, sorry, ridiculous, but still, if you're opening all of that and have zero conversion capacity, it's useless.
Yeah, you're right.
So that's really, for me, the missing link and what we need to focus on.
Okay, thank you. That's very insightful. Thanks, Simon. Let's bring in Saga to the conversation. And what are you seeing as some of the bottlenecks or opportunities?
I was going to just say that we should look at this in a way that outlines the opportunities and the untapped resources that First Nations can bring to the conversation. I mean, from a coalition perspective, the premise from where we begin is that any development that happens within Canada happens within traditional territory of Indigenous peoples, of First Nations people. So this is an untapped opportunity in most instances where we can move beyond the conventional impact benefit agreement and look at, and one of the areas that we've tried to focus on is the infrastructure capital around mining, the mining sector, but also the ability to incorporate First Nations in the supply chain process, in the procurement and contracting process, because when we look at IBA and IBA in the strictest sense, it's about creating, some jobs. It's about creating some very specific opportunities that seem to go outside of the operation of a mine or the concept of a mine, where we're saying, okay, well, how can we build partnerships? How can we do this together and be a part of the spend that needs to happen anyway, yet build the community's capacity along to participate in these areas? And those are the conversations that were happening. And those are the opportunities that we're looking to identify and working with our member communities. And I was talking to one of the panelists today, and the coalition isn't necessarily about targeting specific members. We have now a membership of 150 communities across the country. What we're looking at doing is building the capacity of all First Nations to identify where they can participate in the resource development sector. And it's not about, honing in on the north where mining and exploration activities are happening. It's about being incorporated into the battery supply chain and seeing where there are opportunities across this country for First Nations to participate in all sectors, whether it's the manufacturing sector, whether it's the exploration sector, or the mining sector itself.
Oh, those are great points, Saga, and I couldn't agree more. You know, in my own mind, it's a bit of a paradigm shift because I hadn't really thought of that. You know, and I'm very much concentrating on mines and mills and refining, but why not all the way through? I think that's an excellent point. Yep. And Alla, from your vast knowledge and understanding of where you're flying, maybe share, weigh in on this and tell us what you're seeing.
Basically, my colleagues here put out all the main points, the same that we see through and through again. Like basically, definitely the midstream is missing, and investments in midstream and upstream are missing to the scale that we have in downstream right now. So definitely for a government here is an opportunity to step in, and definitely for investors, both retail and institutional. With regards to investors, what we've been seeing is that investors being disinterested in the mining sector for a majority of reasons, and one of them, I think most commonly mentioned, is unclarity with regulatory hurdles, with going through red tape, things like that. And I think for us as the Canadians to succeed here, it's important to have buy-in through all stakeholders. First Nations, as the owners of the land where resources are, mining community, governments, other communities, us as the customers who will be buying that products. And by having this buy-in and collaboration and clear discussions, corporations, we can provide understanding what's going to happen with each and every project, giving a little bit more insurance for investors, saying, okay, I'm ready to go back and invest in mining projects because I know what's going to happen and when it's going to happen, because that's been repeated within our clients again and again and again.
Okay. Thanks for having that confirmation. You know, what we're hearing is actually what you're seeing as well, and so there is confirmation and validation that, you know, this is actually some of the solutions that we're trying to bring in and have each of us you know, be aware of and helping to champion. Now, we'll go to the next question, and we talked a little bit about partnerships and how things are changing. We know the vehicle markets are changing as well, right? And so, you know, how we did business in the past, Johnna, you kind of touched on it, has changed a lot, hasn't it, to where it's going. And I'm just trying to get a look. We know how it is happening today, but where is this going? What does it look like? And maybe you can share a few thoughts of how you think this is going to be changing in the future for us. So maybe we'll start with Simon from the vehicle ends, from the manufacturer.
Well, I mean, I think one big example in the industry right now is all of the talks about the chemistries and everything that is happening, like the I-nickel, mid-nickel, LFP, LMFP, and what, like there's 15
sodium
of them?
ion.
Sodium, oh, sodium, yeah.
Let's just throw that
And yeah, and there's a lot of mixing about understanding. People think like it's one. And if there's a new one, the old one disappear, and you're just transitioning to the new one. And it's always like 100% of something and nothing else. But actually, no. So the industry is evolving in a way where it will be diversifying, and you will see a range of chemistries coming in. You'll see the I-nickel for the high-end car, you'll see the mid-nickel for the mid-range, and you'll see the LFP-like chemistries for lower like range and autonomy, cheaper car. And this will be evolving. You'll see new generation, higher energy density on LFP. And what this means is that there will be a piece of cake for pretty much all chemistry, and so it's not true that you need to just focus on one and develop on one. The industry will need also to have a capacity to adapt to those changes and diversification, and this is very challenging because we're talking about a chemical business that is very much focused on quality and material validation. So every time you change a little thing, actually the whole supply chain needs to reset. And so that is something that the industry, as in the mining part, we're used historically to, okay, we sell nickel, and nickel goes to LME, and that's it. Like, there's a minimum spec, and that's it. It's very different. Every time I hear somebody talking to me about battery grade, I kind of laugh, and I'm sure Nouveau Monde And you know, Johnna, you can talk about it as well. That doesn't exist. Like, there's as many battery grades as there are cell makers and cathode and anode makers. And if you're producing for 2 clients, you'll need to have 2 very different spec. And this is something that our industry needs to adapt to. And yeah, that will be a challenge because we've never done things this way in the mining industry.
Yeah, exactly. A bit of an agility requirement coming at us. So thank you, Simon. Let's jump to Alla. What are your thoughts?
Well, thanks for addressing the chemistries. Like, we lived through LFP dying, LFP resurrection, we're living through sodium. Yes, thanks for addressing that. There's definitely a lot of noise in the market, which affects, I would say, like investors as well and people near the industry, but it's nice to hear from other participants that we see the future for many chemistries. Generally, what we see in the market is different in terms of people who are not talking before are talking together. So we have downstream and upstream talking to each other, potentially investing, looking for opportunities. Another thing is, like, I think ECG is playing more crucial role. Everyone is more educated about, you know, responsible sourcing and when materials coming from. So that's placed not only for OEM perspective, from miner perspective, but also our consumer perspective when we're doing our decision. Another thing, I think, what impacts market here is we have governmental support and intervention in proportions that we haven't had before in the Western world because we need that support, policies, and things like that. And final thing, I think the consumer, like end consumers of electric vehicle are more knowledgeable today and know what they want. They don't just want an EV or better electric vehicle. They see what's possible, they see what's off around the globe, and they want the right one. So that's new challenges that we're facing here, but there are also opportunities for us to develop. I wish all of us to have soon same number of available electric vehicles and there's in Chinese market.
Oh yeah. Yeah, great points. Absolutely. Thanks, Alla. Saga, what are you thinking about in this space? What is the vision from your perspective?
Well, I think the vision really is that when projects move forward, we have Indigenous consent as part of those projects, and that's seen as an advantage in terms of, I mean, we're talking about financing, we're talking about ESGI. And I think what we're talking about and supporting is that when projects move forward, it will be a given that they have Indigenous partners that are brought along into the process. And when we're looking at external investors in projects, that, you know, one of the questions that we're hearing internationally is, what is the reception of Indigenous people to this project? And whether or not we in Canada want to be brought along willingly or digging our heels in, the pressure is coming externally in terms of bringing that position forward and ensuring that, you know, consent is really seen as an advantage to bringing projects forward, and Indigenous consent is part of that advantage and part of the formula to make a project successful, that you're really not going to get the financing and you're not going to get through the regulatory processes that you need to without being having proactive partnerships with Indigenous communities. And I think one of the challenges that we have as Indigenous people is that we're always wondering what somebody else is doing or what another community's agreement looks like, and is it better than the agreement that we're able to negotiate? And I think that's very challenging, and we need to move beyond those false barriers to get an understanding that we're all operating within the same context, and we all want the same things. We want our communities to be healthy. We want the environment to be healthy. We want to look at 7 generations ahead to have self-sustaining communities, and that involves economic participation, economic reconciliation within the context of resource development.
Mm-hmm. Yeah, I love that false barrier. Sometimes, right, what we're perceiving is actually not really even there, right? So, excellent points. Thank you. Let's reach out to the miners now. Eric, what are you seeing? What's that future look like from your perspective?
Yes, when you build major projects, it's all about partnership. Like those projects are generational, like generations will be impacted by those projects. So for sure, in our specific critical metals project, we have the same thing as a typical mine, local community, First Nation, fundamental relationship. But in the minute I would like to specifically talk about the partnership that is different with the customers. And this is quite fundamental what we're asking. So the customers need to understand that we're building a generational project too. So they need to commit on the specs for 10 years. You know, because it's 3 years of construction, it's 7 years duration of takes agreement to have the debt to build billion-dollar project. And if you're not building billion-dollar project, you're irrelevant. Right. So our competitor, 100% from China, they comes to our customer with a full catalog of product because they produce since at least 2 decades, 1 or 2 decades. So, and they have already amortized their CapEx, they have everything you need, so the customer, oh, let's do request for quote for that product, and that product, and that product, and then they come to us. So, don't laugh, Johnna, it's your turn after. And so, okay, you need to submit a request for quote, hundreds of pages, and what's your price? First conversations, what's the product do you want? And what product are you willing to have for 10 years, you know? Yeah, well, you don't have a catalog? No, I don't have a catalog yet. I'll build a demonstration plan for you. I'll figure out the flow sheet of doing coated spherical graphite. I'll run it for a bit, and then I'll tell you what I can do and I cannot do. I need to understand my cost. I need to understand a lot of things, being able to make a proper quote. And then I'll design a commercial project that costs $1 billion+ in Canada, and then I'll tell you what costs need to be there to justify my project financing. And by the way, you need to invest hundreds of millions in equity, and you need to have a $1 billion commitment on the balance sheet. You still want to do business. so this is a reality. That's the only way to finance those projects. And some customers have the long-term view. So this is what is happening. Like procurement department goes back to C-level of those organizations. Hey, we may have an issue on supplying all those materials. We need to do that and that and that. And there's 2 reactions from the C-level. It's like, oh, let's supply from China. It's easier. Like it's already cheaper. And the alternative is, okay, let's understand what's the strategy and what's the fundamental to build the full supply chain. And so that's why like there's a limitation for a startup. There's not a like 10 customer potential. There's very few that are organized in a way to support such a demand from new suppliers, you know.
I think that's really insightful, and I'm hoping the audience is getting that too, right? This is quite a journey just to get a mine up and running, right? And competing against other entities.
But I want to send a positive message.
Oh, yes, okay.
Because it's happening.
Please do. I was feeling depressed for a minute.
It took a few years.
Okay. On that note, go ahead. Positive?
Yeah, like it's happening.
It's happening, okay.
And if I may, very shortly.
After a few years.
Slowly, I mean, I see it also at the GM side. We were the one asking those weird questions and stupid questions. I mean, not specifically to Nouveau Monde, but we do that. But we're also learning about this. If you just look about a year or 2 years ago, there was very few individuals, I mean, like me, for example, coming from with a mining background and now working with OEMs. This is something that the industry was not doing, and now it's getting at it because of exactly what Eric is saying. Okay. So we're learning also on the other end.
Okay, that's why you're at the opposite ends of
No, but
and that's also why, as you said, we have the First Nation being central to the discussion as well.
Absolutely.
So good.
There's symbolism here. Okay. Johnna, weigh in, please.
Very, very similar experiences. I think one of the point is, and then to layer onto that, we've got these massive mega projects that are $1 billion that are going to take 3 years to build, that are going to last for 30 years, and then you've got this historic, how do you go and get debt for the project? How do you get the financing piece? And the banks have different expectations than potentially what the OEMs can provide. So for example, cars get planned in 7-year cycles. So they know the forecast for 7 years. It doesn't mean they're not going to use nickel after that 7 years, but that's what they're going to give you as a forecast. It's really hard when you're looking for, say 60% of your capital, so let's say $600 million in debt, and they're saying, well, how are you going to repay it? Well, I've got an offtake for 7 years. That's not, you know, historically take or pays, big trading companies with massive balance sheets. So that's how historically, you know, projects would be financed. And now we're in a whole new world. And then the other thing, and then I think there's a couple of really interesting, exciting pieces for the mining industry, just because as we embed ourselves in this supply chain, you know, the mining industry has been boom or bust forever. We've hit the highest highs, we've hit the lowest lows, and we continue, and we hire, and we fire, and we develop, and we don't develop based on that cycle. And I think integrating ourselves into an industry where we look at different mechanisms for pricing, where we look at different mechanisms to embed ourselves into the supply chain might really help stabilize the industry in terms of being able to retain talent, in terms of being able to attract really quality people if they know that they're not just going to get laid off in the next bust cycle. And I think that could be a huge advantage. I think it completely disrupt the way that we currently mine in terms of, you know, everybody wants exposure to the commodity price and the volatility that goes with it, and we're all gamblers. But I do think there's something to be said for making a widget and understanding what your profit margin is on that widget, and to integrate ourselves into the supply chain by maybe looking at how we rejig at least portions of our production like that.
Yeah.
And I think that'd be really interesting for the mining industry for a long-term health. Because I don't think we're a very healthy industry in general. I've been in 25 years. I don't think we're the healthiest industry.
Right. No, I couldn't agree more. I am sort of getting goosebumps listening to you. It would be a wonderful transition for the industry, and like you said, a lot of benefits. And
the traders won't like it.
No.
No. You won't see any of the big guys going that way anytime soon. But I think there's an opportunity for some of the smaller players to look at some really creative options around how, not necessarily the price we pay, but around how we manage that pricing and what that looks like.
Okay, great food for thought. Let's go to our next question, and it's really a lot of discussion about economic reconciliation through partnerships with First Nation and Indigenous communities to really develop these critical minerals that we need for energy transition. And there's really a gap, I think, between talk and walk, right? And I just wanted to get, you know, quickly from each of you, what are some examples of what is going well? Give us some positives here. What's going well in this area? Maybe I'll just start with Saga, actually.
I think what's going, and I mentioned this earlier, I think what's going well is that we're not bringing people to the table, or people aren't coming to the table kicking and screaming anymore, or wondering what this relationship will look like, or feeling that they are that they're being compelled to come to these discussions, not with the foresight to talk about what health and well-being of community looks like holistically. And I think that's changing. I think there's a big change to showcase partnerships and showcase success, and do that in these types of environments, and talk about how First Nations partnerships are successful at any stage of the mining sector, and hopefully as we move forward in terms of the refinement of these critical minerals, and that we're doing it within the context of a domestic market. And so I think that that's one opportunity. I think coming back to this concept of health and well-being, I think that there's an opportunity to look at reconciliation within a framework of community well-being, and that involves Canada making this a priority and making the infrastructure within our community, so the health services, the education, and housing and access to clean drinking water. All of these need to be a priority for communities to have the opportunity and have the capacity to not worry about those things, not deal with crisis all the time, but looking ahead and saying, okay, well, how can our youth participate in this project 30 years from now? What does that look like? How can we educate our population in order to take up these opportunities? And how can we create engineers, not just janitors, or not people who are just working underground, but how can we create that workforce that is actively participating? And that involves everybody's help here. It's not just us talking about having schools that are a healthy place for our kids to be educated in, and get the same education that everybody else gets in this country. It's not about communities like my own, Curve Lake, having to file class actions to have access to clean drinking water. it's about everybody creating and understanding the standards that they live by are the same standards that we want for our communities.
What a great vision. Yeah, thank you, Saga, for sharing that. Let's jump to Simon. What is an example that you would have that?
There's so many. Honestly, I think in the mining industry, if you look back over the past 10 years, there's a lot of very good examples. I think we have 2 on the panel, so I'll leave those 2 very good stories to them for them to tell. But we focus a lot on the mining, but to Saga's point also, it needs to move a bit downstream in the industry. And I think another good example is what's being done right now by GM and its partner POSCO in Bécancour. Most people don't know, but we are directly on Wabanaki traditional land. I mean, the community is, Eric, less than 5 kilometers from the site.
I thought you said 500 meters.
Yeah. I mean, the community itself, but the land, of course, is all over it. But the point being is that right from the get-go, we went to them and we started asking questions like, how do you see yourself in 30 years? Like, not so much, so we're totally outside of this typical good old, like, IBA concept. We're more into how can we collaborate? What shared values can we develop together and establish objectives of, okay, what do you expect from this global battery strategy, which is right in your backyard? And honestly, we haven't talked so much about jobs and royalties and stuff like that. We've talked about black ash and the preservation of black ash for, the conservation of traditional, habits that they have out there. So it's a totally, because we approach them with a totally different set of questions, like how much money you want? No, it was more, what do you expect in the future? And what is it that you have now that you absolutely don't want to lose with this?
Nice.
So, yeah, I think that's a good example of what we've been doing here, very humbly, but yeah.
Yeah, very, very humbly, but an amazing change, let's say, from the past.
Yeah, absolutely.
Great example. Eric, over to you.
Yeah, it's a very complex question and even more complex answer. So, and in the last 10 years, I would say we are always in this, okay, we need an IBA and then we need to negotiate. And then I was in this like since 12 years. Like I met the first time the chief of Manawan, the Atikamek Nation in 2013 in the exploration. But, until recently, I really understood what the British Crown and the French, in our case, did to the First Nation. Because what we learn at school, it's not like my kids are learning at that's not the good thing. You're laughing, Saga, because and recently what we did, we hired expert who came and trained. It's a mandatory training at NMG to really reconstruct, to understand really where they come from with their demand and what they, what happened in the last few hundred years of interaction. It's horrible. We need, first of all, in our negotiation, to feel ashamed. And it's not only about the lawyer that they hire who yell at you, sometimes. It's, you need to understand why, and it's fundamental, and to be like reconciliation to happen, we need to understand first what we did as white and how they see us when we represent the Crown to come extract some resources and they're close to their community and where they used to use this land like hundreds of years ago. So that's a long history. That's the first step. Yeah. So it's going very well with our negotiation, and that's something also we do with our customers, with our foreign investors. It's do you have your IBA? No, not yet. We're dealing this IBA since many years. It's going very well. We need to understand step by step and meet with the chief many times to understand what is the need. At the right time, we'll get this IBA. It's not only having just the English way. Do you have your paper? Do you have your paper there? Yeah, we get the paper. It's the relationship that matter more. And we need to go at the pace of the First Nation, involve them. And also, and what's going well, I would say, is recently I start to feel that they understand a bit more what is a major project and what is needed to finance those projects and what, so it's about relationship and making sure we each other understand each other instead of just like basically yelling between lawyers sometimes.
Well, fantastic, and thanks for sharing that. Yeah, the two-way conversation and understanding is the relationship is everything. So, yeah. And how about you, Johnna?
Yeah, I mean, we're very much in a maintenance relationship at this point in terms of we've had a relationship with our local First Nation, the Abitibi-Winni, since we first started on the ground. And I'm not going to even take any credit. It was our VP Geology Exploration. That was really key for him, was getting on the ground and developing relationships. So it started with an MOU, built the conversation from there. I think one of the things that if you look at the area, we're in an area where mining has existed for 100 years with very, very large companies in the area, and we were our First Nations first IBA. And so, that it just, and from that experience, they have now gone out and negotiated additional IBAs and additional agreements. So, being able to do that and seeing how they've been able to take that step and then develop it out and, fully develop businesses on the back of that, and be able to participate not just in sign the IBA, but actually develop businesses that have long-term ramifications for their communities, positive ramifications for their communities. And now, where we are today is really around walking the talk. Because we have the talk, we have the agreement, but now as we advance the project, as we start additional work on the project, making sure that we're meeting commitments, we're getting involvement, that we're continuing that conversation, because it's not just a stagnant one-time thing that there's a piece of paper and that's all we do. We're continually making sure that everybody understands what's happening. Everybody's consulted, everybody's consenting, that we're always having those conversations, because time and people and requirements evolve continually. So it's not just okay, we've got it, check in the box, walk away. We have regular meetings to make sure we're all on the same page still. So no, for us it's been a really long time, but it's been a great benefit to the project, 100%, and it's something that we value in terms of their commitment. 100%.
Congratulations. That's
and I can say that now because it's a lot of work to get there.
It certainly is, and relationships are tough, but you've done a great job in continuing to. So thanks for sharing that, both of you, from the mining and OEM side. How about you, Alla? Maybe take a minute and let us know if you want to add anything.
Yeah, for sure. Yeah. Definitely, we do hear a lot of good stories about relationships. And I also want to acknowledge that I do think that, First Nations and Indigenous coalitions, they bring to the table a lot of knowledge, and they're being proactive right now. It's great to see. One of my colleagues was privileged to attend Coalition Roundtable 2 years ago, and we couldn't hear enough about that event, and we hope to attend more in the future, for sure. I think also another thing that, because whatever is done is being done for benefit of everyone in our communities and the country in general, we also need to find a way to come together and acknowledge that no is also an answer. Not each and every project needs to go through, and we need to have a common understanding and work towards understanding why and what, and be okay that something won't be done.
Yeah, that's very true. That's very true. And thank you for all of the answers. I had a few more questions, but I think what we're going to do is just turn it to you and ask if you'd like to ask a question to one of our panelists to please go to the microphone and ask away. And I think we have one now. Go ahead.
Good morning. I'm Chris Hill from the city of Guelph, and I confess I know almost nothing about mining. I did see a headline this morning that said that the price of critical metals is going down, and as a buyer of EVs, that sounds like a good thing to me, but the article seemed to suggest that it was a bad thing. Could somebody explain what's going on and whether this is a good thing or a bad thing?
I can explain why it's good and bad.
And she'll tell you why it's bad, and Eric as well. Go ahead.
Of course it's good, especially on the GM side, for example, because we get the minerals for a cheaper price. So ultimately, yes, the EV is cheaper for our clients, absolutely. But then the problem is execution. All these guys are trying to raise money right now, and the money they raise from a very challenging market, and that market is essentially, and the bankers and the investors are saying, how are you going to make money out of that investment that I'm going to make in your company? And if the price is close to OPEX, then it makes it very difficult for them to raise money. And then I have a problem, and you also have a problem as a driver of an EV or a future driver of an EV, which is that you're actually never going to get a car. Because if we don't have the mines that are funded and ready, so they get the money, they can make a decent margin on it that is reasonable and balanced so that all through the value chain, you have a healthy margin, but without killing your client, then you will get a decent price on the EV. So that's why all steps of the value chain need to have a balanced market. And right now what we've seen is just very ups, very down, and a lot of challenge. Yeah.
Those markets are tiny, huh? So you have a GM building 3 plants. They require that amount of lithium hydroxide and graphite anode and this, and it, boom, big demand block, and then you open one mine of lithium, you have a bit more, and it's swinging in both directions very, very crazily. But at the same time, in graphite particularly, you know, December 1st was a big date. Is the date where the Chinese government said to the rest of the world, we don't want to give you the graphite anymore. You need to have a very specific export license if you want to export outside China. And at the same time, the US said, we don't want Chinese anything, so including graphite. So so what it's creating an oversupply in China because suddenly the exporter have more difficulties to bring their product out of China. So if you look at pricing in China, which is the only pricing for graphite today, so this is the only pricing my customer are looking at. so I mean, there's an oversupply there, but outside of China is exactly the opposite in terms of supply and demand. Here in North America, there's none. Graphite, and there's a big needs, like over 1 million ton in a few years. We're only 42,000 ton. If you add up all the big OEMs demand in the next few years, it's like 1.5 million ton of graphite anode. And nobody's building because in China the price is down, and the investor look at this, and the Global Mails, or I don't know which media is saying, Canada is ranked #1 on paper, but then, you need partnership with customers who understand those fluctuations and make it happen, and understands that it's an essential component of the battery. And if it's not there, you can invest in everything else, but it will be a warehouse of equipment if there's no supply of critical materials that goes in it. You know.
Yeah, and you know that's really a great point. And I think maybe Johnna, you want to jump in?
Yeah, sure. I mean, and just to layer on that, you know, today we all have, you know, it is a commodity. There is a long-term forecast of what commodity prices will be in 2028, 2029. But the reality is everybody gets caught up in those headlines. And today's price is what people sort of say, well, that's what your project's valued at. Because at the end of the day, we sell our product related to that price in some way. And so, you know, that impacts our ability to get debt financing. That impacts the value of the project, which then impacts the ability to actually get investment in the project. So if we can't get all of those things to come together and look at a more long-term, what is the future, how do we integrate this into the battery supply chain, you know, it's going to be very difficult for projects like all of ours and other ones as well to be able to get enough funding to actually be able to put them into production and construct these large, and it's a time lag too. We need 3 years to build. So it's also about time lag. This is not happening tomorrow. So it's about what do you see in 3 years, but everybody's opinion gets very much weighed down on the headlines of today. So again, it's timing all of that and being able to take advantage of that.
Yeah.
Or not.
Yeah, absolutely.
I would like to add that some of the existing supply chains, they don't support the same practices that are common here in Canada. I'm talking about sustainable or responsible mining, and also are being supported by different measures by their national governments, to which we don't have access to, or like questionably compatible. So with this regard, it's what we have on like especially Chinese pricing, or like prices quoted in China, is impairment for all the critical metals and materials right now, because they are not support long-term investment and keeps us vulnerable and dependable or outside suppliers. It's definitely
it's a big risk.
Exactly.
Yeah, thanks, Alla. Simon.
Yeah, very briefly, but I mean, I tend to always propose solutions. We've exposed a lot of problems to this, but I think one of the solution that, and GM, we've been very strong on this, and you've seen an announcement that was referring to Valley, and you will see new announcements coming up very shortly to tackle that problem, is essentially we want to protect our supply from the market influence, and we're planning on signing contract with suppliers directly with mining companies and refiners to build that supply chain and kind of get it outside of the market influence by having those supply agreements with responsible sources of raw materials. So at GM, that's kind of the solution that we've put in place, is to make those investments upstream and midstream to build that supply chain and protect it from the influence, to the extent possible, protect it from the influence of the market.
Yeah, which is very, secure from the mining industry point of view as well, right? So to Johnna's point, trying to build mines or expand mines, you need that security of supply with your customer. Saga, anything to add on that?
Well, I think I'm a good example of ESGI in action, because I sit on a number of publicly traded boards within the mining sector. And to Eric's point, our capacity around understanding the financial cycle of how mining happens is starting to get more and more, I think, built within our communities. And as a junior or exploration company, you're always trying to raise funds to drill that next hole, to find that next resource, and to solidify where that resource is. And I think understanding that financial cycle is really important for communities to set their expectations around what a realistic partnership looks like along that financial chain and along that development chain. So I think having that individual understanding and having that built for communities is really essential. So it's not just about, oh, it sounds good that the commodity price is low, but that we're building a healthy, robust system to tell a good story when those partnerships happen.
Mm-hmm. Yeah, thank you. Thank you for that question that unleashed a myriad of responses here, but you can see how complicated the space is. So thanks for that question. I think we have time maybe for, do you have a very quick question?
Yeah,
you
a very
do.
quick question.
Okay.
Hi, I'm Sean, I work at Knockout. I want to ask especially Johnna and Eric about how they are using innovation and technology to make mines of the future, or what is their wish list? I know there are so many challenges happening at the same time, but how would a mine in the future would look like? Because we can't be doing the same thing which we've been doing for past 30 years because of everything is becoming from important to urgent. Yeah. So what's your take on?
Yeah, I have a couple takes. My one take says that my debt financiers and my banks want me to be as boring and as historical and as uninnovative as possible. They want me to build exactly what was built next door to me. And can I just build that? Because that's in their eyes, low risk. Right. So I'm driven by that. So that's one balance. And then my other balance says, yes, we need to do things differently. We need to do things. So we have opportunities. I think one of our biggest innovations is really looking at developing the downstream, developing the conversion plants. So, although Dumont is a mine and a mill, there's another company that exists that's looking at taking our concentrate and turning it into battery chemicals that can feed, companies like Simon. So it's very much how we do that, and that's really innovative, because I think that if we look at the existing technology that's out for nickel, that we look at it, smelting, refining, that have been around for 100 years. That's great. It produces really great purity nickel, but it's very expensive. And also, it doesn't actually produce a product that can go directly into the battery market. It still needs to then go through another refining. So they have to change as well. So I think being innovative around that space has really been interesting for our project in terms of how we get to the market. And then otherwise, things like taking advantage of some of the natural characteristics of our products, like, for example, our waste. We have a large open pit. It will produce a decent amount of waste, but our mineral that's in that waste can actually sequester carbon dioxide. So we can actually not just produce a product that will reduce carbon emissions, but we can actually absorb carbon dioxide from the atmosphere with our tailings and waste. So how do we optimize that? How do we take advantage of that? And then we look at just all the other things that go around with optimization in terms of automation of trucks, automation of processing plants, as well as things like how do you electrify everything possible. So going from diesel burning trucks to electrification, we're talking about 300-ton haul trucks. That is going to be a step away, but there's steps to get there, such as trolley assist can reduce our diesel by about 33%, and we can do that by about year 5. And so how do we implement these things so that we have a path to net zero nickel through a combination of the features that we can take advantage of? So we look at those two. So there's two different things that drive us.
I think we're at 0 time, but and you know,
Sorry.
Really,
No,
no,
that's fine.
I think
I'll be available at the lunch break.
Johnna, you covered a lot there, and I think you kind of came full circle back to EVs, right, for the mining industry itself, you know, and something that we're very proud of in the mining industry is the fact that
I think your fleet's going to be all electric.
Yeah, that's
yeah, you're
I
going to be
really
all
much
electric.
encourage people to go and ask that same question to Eric and what they do at Dumont, which is absolutely amazing.
Yeah.
So
yeah.
Or ask our partner Caterpillar, who's finally
Right.
doing it all.
Yep.
Yeah.
I would say there's a number, and you know, so I was just a quick wrap up for this section, and I just want to thank all of you for participating to you, and also yourselves for your rapt attention and understanding that this is a very complicated space, and that we do need to integrate and collaborate and work together for all kinds of really great benefits. But the big one, if you come back to it in EVs and why we're doing this for eliminating risk, right? Risk of climate change, health of the planet, but also people, right? So you wouldn't notice it so much driving a vehicle outside today, other than maybe smog in downtown Toronto or whatever city you're from. But go underground. If you ever get a chance to go underground, do it. Go stand beside a diesel-powered piece of equipment, feel the heat. You're going to hear the noise, and you're going to inhale the emissions that come out of that engine. And we have thousands of employees underground that are living in that environment. You can go stand beside a battery electric or trolley or tethered piece of electric equipment in that same environment. There's no heat, there's no noise, there's no emissions. And for the risk of those employees and their health, we have to do this for all of us. Right? That we have to do this for the mining industry, but all of us as a society on this planet. We need to move to electric vehicles. Kudos to the people that are making this happen, and yourselves as well. I think at this time I will pass it back, and I think right now, would you like to come in and? Okay, thank you.